what the latest data suggests, inflation cooling to almost 5%, more than what was expected, while industrial growth is at a 14-month high. Help us understand what this data really means.
Yeah, thank you, Siddharth, for inviting me. Always a pleasure talking to you. On the inflation data, I think the headline decline was mostly because of fruit and vegetables. I think the more encouraging trend was that the core inflation drifted down a bit more. And while food prices tend to be volatile, some of them are very short cycle. The encouraging thing is that we have been below 5% for several months now on the core inflation side. And I think that should give us some comfort on medium-term inflation projections being anchored. On the IIP data, I mean, I've been saying for many years that it's completely disconnected from reality. So to be honest, I don't pay much heed to it. But I must say that directionally, what it is indicating is something that we see as well, that most indicators of construction, like cement volumes, cable and wires, tiles, PVC pipes, these are all showing resilience. In fact, September quarter numbers, September quarter volumes for many of these companies are likely to be quite strong. So if all of this is happening, we are seeing double-digit cement volume growth after nearly a decade. All of this is a sign that the economy is on a very sound footing.
If the economy is performing the way it is, what are the latest numbers that you are working with as far as full-year economic growth is concerned, Neelkanth?
So earlier in the year, earlier in this calendar year, December, January, it was fashionable to say that India's economy was going to slow. If you remember, fourth quarter FY23 growth was at that time expected to be in the 4.5% range. And everyone felt that 6% for FY24 was too strong and that it was more likely to be 5.5%. And I always felt that the 4.5% was misleading and that FY24 would turn out to be 7% plus. I still think that we are growing at that pace. Now, there are some apprehensions I have about the pace slowing down over the next 6 to 12 months, primarily because of global risks. So there are some domestic factors as well, but they're minor, which is that some of the infrastructure construction has been front-loaded by both central and state governments. But I think the bigger risk is in global export growth for goods and services starting to slow down even further from here. We have seen some marginally negative commentary from the IT services firms. And as the US heads into a recession next year, I think the headwinds to growth can become quite significant. So I do think that we will slow down from here, but closer to the 6.5% range after slowing as a run rate level. I think the full year number will still be closer to 7% or so.
If you like the video, do like, comment, share and subscribe.